Welcome, everyone. Today we're talking about charitable giving. As we approach year end, this is often a good time to think about your charitable giving strategies. And there's some changes that my colleagues here would like to discuss with you. I'm joined by Andrew Randisi and Christopher Mallon. They're both certified financial planners here at Pennsylvania Capital Management. And as I said, we're going to talk about charitable giving. So take it away, guys.
All right. Do you want to start us off, Andrew? Where do you got?
Sure. I'd say the recent tax legislation that passed in July had a couple of sweeping changes, and some of the things that now are being affected for tax year 2026 are going to be new. There are new rules for gifting. Most specifically, and we can get right into it, one of the very things when a lot of us that think of charitable gifting comes to mind is gifting cash donations to public charity, whether that be donating a few $100s to the ASPCA or the Ronald McDonald House. It is now changing the amount that is able to be deducted in a current year. And this has actually gotten a little bit more generous. In 2025, for example, if you donate cash to a public charity, you're able to deduct up to 50% of your adjusted gross income for cash donations. Starting in 2026, that has increased to 60%. So I'd say as an example, if one had a adjusted gross incomes in 2026 of $100,000 per year, they could gift $60,000, up to 60%, of cash contributions to a public charity. Now, what begs the question? What happens, and we have some clients that do this, what happens if I gift more than I exceed that 60% threshold with my gifting? It's not the end of the world. What essentially happens is anything in excess gets carried forward, and it can be carried forward up to 5 years into the future. I'd say real property, mainly stock. If you donate investment securities, stocks or bonds, investments, ETFs of that is still up to 30% can be donated to charity. You can get a 30% deduction against your adjusted gross income. That did not change, just cash.
All right. Makes sense. And then how does this tie into the new floor that comes in? So I guess you're getting the extra 10%, right? That can be offset against your adjusted gross income. But now there's a floor you have to pass, right, in order to essentially get that, correct?
Yes, exactly. For clients who itemize, there is going to be a new floor, which would be a half of a percent of your adjusted gross income. So I would go back to that example. Essentially, what it's similar to how there's floors for qualified medical expenses. In this case, if your adjusted gross income would be $100,000 and you want to donate to charity, you have to be above that half a percent floor. So in that example, half a percent of 100 grand is $500. Your charitable contribution becomes deductible so long as you donate greater than $501. So I go
Right.
back to that example of client XYZ donates $60,000. That $500 floor kicks in. Of that $60,000 contribution or donation, 59,500, 60,000 minus 500 is actually the charitable deduction that goes on your itemized taxes for tax year 2026. Now, what happened to that $500? That $500 that kind of got caught in the floor, that gets carried forward and can be taken at a later date up to 5 years into the future.
Okay, makes sense. And this is something we've talked about with clients sometimes too. It's essentially incentivizing in a way is to look at bunching when it comes to charitable gifting. And this is something we've talked about before a little bit. Bunching being instead of in theory thing and say, okay, I give 10,000 a year every year to X, Y, and Z charity. Instead of maybe something to consider would be, okay, maybe we do 20,000 in this year to really get past that half a percent floor. And then again, to take advantage of the higher percentage of the AGI number too. Again, it all depends where your income is and how much charitable giving is being done. Because then you can take more advantage of, again, that 60% and then get past that floor. So less and less of it gets eaten up by the half a percent floor. So it's something we always look to consider instead of just simply, oh, we'll spread it out equally every single year. Let's bunch it all together, knowing that if some stuff is in excess of that 60% anyway, we can roll it forward to future years instead of simply just spreading it all out.
Well, yeah, precisely. And I'd say in most cases of our clients, they're not necessarily donating cash, they're donating
Right.
marketable securities,
Mhm.
which falls under a 30% AGI,
Yeah.
which makes things
Mhm.
even a little bit tighter to want to be mindful of. I'd say an example with this, and because of the 0.5% floor, if you have a client making $1 million, because I have 100 grand was a
Mhm.
pretty easy floor to hit. Million
Right.
dollars, that client needs to donate at least 5,000 and $1 of stock, cash, etc., to even get the deduction to qualify to be able
Right.
to count it on their taxes. So what really comes into play is what you just precisely said, that bunching strategy. Maybe instead of donating $10,000 to charity every year that's been going on or less, for tax year 2025, double down, do 20, and then skip 2026.
Yeah, because if you're gifting in 2025 while you're giving up that potential higher number on the AGI, so instead of 60%, it's 50%, say we're doing cash, then but you don't have the floor to deal with for 2025.
Exactly. You don't have that floor to deal with.
Yeah, so it makes sense to pull stuff in forward here. Now, conversely, one of the other changes is on the if you're taking the standard deduction, so this is going to be a majority of even probably most of our, or at least a good bit of our clients and a majority of tax filers out there will be taking the standard deduction starting in 2026, so not 2025. If you are single in filing, you're able to deduct another $1,000 for charitable gifting, or if you're married, it'd be $2,000, which is a pretty significant change from years past. There have been some history of it for smaller amounts, but even if you're not itemizing, if you're not itemizing and you do charitable gifting, that's great. However, you don't get to take it off with your taxes. But now they're adding a separate, essentially one line item where, hey, up to $2,000 for a couple or $1,000 for a single person to deduct off of the top line of their income to help with taxes too. So that'd be something where if you are taking standard deductions and doing charitable gifting, maybe it makes sense to wait until 2026 to make that happen so then you can take advantage of that new change.
Yeah, and the one thing to also be mindful of, we'll call it the new non-itemizers charitable giving
Mhm.
deduction. It must be cash only.
Right.
To take
Makes
advantage of
sense.
the 1,000 or
Yeah,
$2,000
the 1,000 or the
cash.
2,000, it must be cash.
Oh, that's a great point. So just to reiterate that, so if you are not itemizing, it makes sense to hold off on your charitable contributions until 2026 because you'll get a tax break up to
Exactly.
$1,000.
And I know that might be putting the charity might between a rock and a hard place, because usually the charities love getting the donations in the current year, just maybe deferring until January will get the funds to the charity, be able to satisfy the charitable goal that you have to, and you can enjoy the benefit of the tax deduction.
Makes sense. I like that one. Any other points on charitable giving to cover here, guys?
Think that's it for today. There's some other little nuances here and there. Again, this isn't all encompassing in 10 to 15 minutes here, but there's the heavy hitting changes. Really some stuff to consider before the last few months of the year when you're looking at, okay, what's my tax picture look like? Are we itemizing this year? Okay, great. Let's see if we could take advantage of the changes or before changes set in to gift more this year or potentially wait till next year
Yeah, and
if we're not itemizing.
the one thing that I would say for our listeners and viewers out there, you'll, and this is going to be for the non, or actually for itemizers. If you're able to work with your accountant, tax professional, and try and get an idea of what your income is by the end of the year, or look like or also can forecast what your income might be for next year, that would be great. That way you can be ahead of, if you are going to be donating in 2026, you know what your floor is, so you know how much you need to donate to charity to get above that floor.
Makes sense.
Great. So this is a great topic to discuss with your tax professionals. And obviously, Chris and Andrew are here to answer any questions that we can help with as well. Thank you, everybody, for
Perfect.
joining us today, and we will see you next time.
Bye bye.
Bye.